Yeah, it's nice to see the 10-year come down a little bit. And by the way, if you had to choose between the stock market being right or the bond market being right, choose the bond market. Okay, so the bond market doesn't believe this inflation story. He actually probably believes a soft landing, or as Steve put it, kind of a bounty landing. Steve, the question I had is last Friday. That to me seems to be very meaningful. You know, we kissed that 20% down, you know, the bear market, we just kind of kissed it. And then from there, we had a really great intraday reversal, and we've had follow through this entire week. And again, it's hard to get optimistic with all the things that are happening, as you mentioned, but do you see that as a key turning point last Friday? And maybe that just kind of tells us maybe the bad news is priced in?
No, you know, that's the second time now, right, that we've had that intraday touch point at 38.50 roughly. And, you know, that's a key technical level for a lot of reasons. So it doesn't surprise us to see a lot of buying interest there. We want to see that level hold longer term. And I wouldn't be surprised, frankly, given the difficult outlook, this rally in treasuries, you know, God bless the bond market, but they weren't too right a year ago either, you know. So, you know, I don't think this rally in treasuries is to stay. We could see 10 years in the 3.5% range, we think, before the next 6 months are out, before they settle in at 3. So I'd like to see that level hold longer term. Our guess is if it cracks, you know, it might get a little bit ugly for a week or two. But there's going to be a lot of good buys at that level. But in the meantime, we just, I can't see getting aggressive with, particularly with tech stocks here, where valuations are still a little bit high.
Right.
And they're coming off of COVID, and there's a lot of built up revenues in there that might, you know, maybe have got double counted.